Hello, and welcome to the Weekly Watch. I'm Brian Daingerfield, the co-head of G10FX Strategy and NatWest Markets, filling in for John Briggs. The offset between fiscal and monetary policy continues to be an important driver of global asset markets. Where this is most obviously the case has been in the United Kingdom, where changes in fiscal policy and expected offsets from monetary policy have been a significant driver of both macro sentiment and asset prices in both foreign exchange and in interest rate markets. We want to turn to a different economy where fiscal and monetary policy has the potential to change in the near term because of an important fiscal event, the upcoming Party Congress, and that of course is in China. And so I'm happy to be joined by our China economist Peiqian Liu to discuss the Party Congress and some of the upcoming implications for markets there. So thank you very much for joining us, Peiqian. First, I want to ask, what is the National Party Congress and why is it so important? Why should investors be paying attention to this event?
Thanks for having me today, Brian. The upcoming 20th Party Congress will be a critical political event on the calendar where the Communist Party decides on its members for the top leadership body, namely the Politburo Standing Committee, alongside with major party members within the Politburo. This year is slightly unusual because President Xi Jinping is widely expected to break the norm and remain in power for at least another 5 years. So besides the political transition that everybody is watching out for, the Party Congress also offers China's comprehensive medium-term and long-term policy plans for the next 5 years to up to a decade. Long-term policy changes are typically taking place after such political event, like the anti-corruption campaign that started since the 2012 meeting and the deleveraging that started since the 2017 meeting. So this year we're watchful for how China could explain and determine its next 5 years top policy priorities, especially around the slogan of common prosperity and how China balances its quality of growth as well as the pursuit of growth rates.
So in terms of growth, I think the biggest near-term policy, which I think gets a lot of focus, is China's very aggressive zero COVID policy. This is much, the zero COVID policy, I think, is much more out of line with the strategy taken by many other economies. You've seen certainly more aggressive reopenings in the West. Do you think this Party Congress is an opportunity for China to make a decisive change in its zero COVID policy?
Yes, you're right that zero COVID policy remains one of the bigger pressures for China's growth outlook, at least in the short term. But we don't expect any significant or drastic change to zero COVID policies immediately after the Party Congress, because typically the political meeting does not announce any significant short-term policy changes. But it is still important, and we expect it may pave way for a new phase of COVID policy regime, where we might hear clearer communications over an exit strategy towards COVID management, maybe shortly after the Party Congress. More significantly on COVID management, I think that putting COVID to a lower category of infectious disease control domestically, or hearing an WHO announcement on the end of the pandemic might be more significant milestones for us to watch out for China to relax its COVID controls more decisively. Until then, I still expect China's COVID policies to be more prudent, and the reopening will likely to be very gradual.
So that gradual reopening, I think, also could keep the market a little bit worried that COVID-19 lockdowns could still come back into place at some point, which is something that may continue to hang over the outlook for China's recovery. I want to take a step maybe in the longer term, the more medium term outlook, think about the qualitative versus quantitative growth that you mentioned, which I think is such a good point, thinking about China's longer term strategy. Recently, we've seen some stress in the property sector in China, and there's some question over whether or not China would be willing to take aggressive fiscal and monetary easing in order to provide support for that sector. I think more recently, as you have written, there's been more targeted easing in that sector. How are you thinking about China's property sector and China's decisions about fiscal policy surrounding this sector? And what's your view on the overall growth outlook with this in mind?
Right. I think Brian have rightly pointed out the other major pressure that China is facing is rightly the property sector. the property sector has been seeing some easings recently, especially before the Golden Week holidays. But on aggregate, I think the easings are still likely to revive some consumer demand to establish a bottom line for preventing further slowdowns. It's very unlikely that these policies will lift growth rates because as you mentioned about the long-term policy strategy, which mainly revolves around properties for living, not for speculation, as well as the tough 3 red lines that's being imposed on property developers to prevent them from aggressively accumulate debts. Those policy remains largely unchanged and is still likely going to weigh on the sector as a whole. So overall, we think that the expectations for property sector is perhaps a gradual and mild recovery at its current low levels, but it's nowhere close to the previous easing cycles where it becomes a major engine of growth again.
So turning to foreign exchange markets, like a lot of currencies, the Chinese yuan has been under pressure against the dollar amid its general rise, in a lot of cases, substantial rise over 2022. Now, the currency is off its lows against the dollar, in dollar CNY terms, off its high points in recent sessions. But the pair did recently cross above the important threshold level of 7.0. And it sounds like Chinese policymakers are becoming more uncomfortable with at least the speed of the move higher in the dollar CNY exchange rate. Are you worried about a particular level that Chinese authorities may begin to step up more aggressively with its FX policy actions? And what are some of the options available to Chinese authorities if they're looking to maybe assert a little bit more control over their exchange rate?
Well, I think the yuan weakness, as we have witnessed so far, is a combination of both domestic factors as well as external. Domestically, we have seen that COVID-0 property sector has been way on growth, so the fundamentals look somewhat weaker than expected. Externally, we have a strong dollar, so both of them are pushing yuan beyond its psychological barrier of 7. We have seen the PBOC stepping in, but the policies so far, as well as the comments, have been to maintain the FX stability into the October's Party Congress. It did not signal any intention to defend the specific FX level. The fact that dollar CNY marched across a few key levels is an indication that the PBOC does not really worry about any FX levels. But that being said, I think the PBOC will still be on top of managing FX volatilities to prevent any aggressive pace of depreciation, which might risk markets to go into one-way bet against the speculation of depreciation. So the few policy tools that we're watching out for is perhaps reintroduction of the counter-cyclical factor as an official policy tool, or more aggressive policy controls such as limiting the capital outflows, mandating exporters to sell their dollar, or high-profile FX interventions. But that being said, we haven't seen all of those yet, which means that the authority will still refrain from aggressively intervening in the market for the time being and let market determine the fair level of the yuan. But we still think that the officials and the PBOC will signal discomfort against the pace of depreciation if it goes too fast and too far.
I think that makes sense, especially when you look across the globe at other central banks that have intervened. The Bank of Japan, for example, and the Ministry of Finance in Japan the intervention seems to be geared towards a pace of movement, a pace of change, rather than a specific level. One last question for you on the Party Congress, Peiqian. What are some of the key dates that our listeners should be keeping an eye on for? I know this Congress lasts, I believe it's over a week, actually. So what are some of the key dates when we expect some of these important announcements, and what should we be paying most attention to?
There will likely to be a lot of meetings, but I think 2 are most important, one at the first day and the other on the last day. On the first day, President Xi is going to deliver a political work report, which will outline China's major policy outlook for the next 5 years. And also on the last day, the Politburo Standing Committee will meet the press to give us a glimpse of the top decision body.
Well, great. Thank you very much for the conversation. Thank you for joining, Peiqian. And to our listeners, thank you for listening. If you enjoyed this podcast, please be sure to give it a like and to subscribe to our channel for additional NatWest strategy content. Thank you very much.